Okay, so let's look at this consolidation pattern. If this is a breakout, I want price to remain above the breakout. I don't want price to re-enter the breakout, because that would be a false breakout, which could trigger a fall down effect, and price could come down here. And where will the stop be? So if this doesn't work, you have to calculate. So if price reverses, I'm willing to lose 1 to make 4. Okay, so 1 can be $100, $200, $500, depending on your position size. So I will say, okay, price could come back and test the top of the pennant. That's possible. Or test some of those highs here. That's doable. That would be 1600. Again, I'm talking in terms of simplicity of numbers. So they will be risking $1 or $100 if I enter one coin, one position. And I see some lows down here. I don't want certainly price to return down here, but it is possible the price could test some of this low down here. Again, they will dismiss my breakout theory because price is returning inside the consolidation area. So, but for simplicity, let's say we set our stop loss at 6,600, right through here. So if price comes down slightly below and touches the top of the channel and comes a little further down, we are out, because then that didn't work. Okay, so we're risking 100 to make 400. So 400 should be 700, somewhere up here. Is it possible? Well, usually targets are calculated in this way. You measure a previous movement the price has made. Here we go. This price came from 57.40 down here all the way up to 6,600. So let's call it, again for simplicity, from 5,600 to 6,600. So that's 1,000. Price moved $1,000 right here in the course of several hours. Consolidated. So if price made 1,000 point move, we should expect this movement to be something similar. Okay, so in that case, if I'm thinking, all right, if I risk $100 right here, to make $1,000, well, that's worth way more than a risk-reward ratio. So yes, that would be a very good risk-reward ratio. That's actually 1 to 10. Now, we don't want to get too greedy, so we want to keep it between the 1 to 4. Okay, 1 to 4, 1 to 3.5, 1 to 4, 1 to 5. Okay, so we're risking 100 to make 400, 500. Okay, so somewhere around the 7,000, 7,100 support resistance area. You also want to go back in time and look if there is a resistance, an obvious resistance back in time, last month, 2 months ago, so you know where the resistance is, and usually at resistance price will bounce back down. So take profit at resistance. Okay, so we enter the trade, we set the stop loss to be triggered if price moves below 6,600, and we let price run. So we set the target at 7,100 because we enter at 6,700, and we want our target to be $400 above it, 1 to 4 ratio. So that's 7,000. Okay, so now what's going to happen after? Okay, so here is the movement that price did. So this is the 1,000 point move. Here we have, so from 66 to not that much, stopped here, consolidated. But this, you see, this reached our target. Once price broke out, had a follow through, volume continued coming in, and then a little bit of consolidation, which we see right here with volume decreasing. And then more volume, as more volume is coming in, price is moving higher. And then we get some more consolidation. But you see, price is not making lower lows, it's moving sideways. So this would have been another place. Let's see, you take profit when price reached 700, 7,100, and then on one of the pullback you closed. Now as price moves higher and reaches your target, keep raising your stop loss. Previous lows, keep raising your stop loss. And then price reaches the target, close the position and be happy with that. Don't continue re-enter the position. Okay? This is very important. This is one of the issues that most traders learn the hard way. They overtrade, so they make 100 and they lose 200 on the same day. They get so excited, they make 300 and then they lose 600 2 days later. So that's how we eat away at the capitals. Yes, that's very important thing to understand. Don't overtrade. You make a profit, be happy with that. Walk away, go for a walk, enjoy life, take your car for a drive, take your dog for a walk, take a break, walk away from the computer. Come back to work when you're ready and then look for another buy opportunity. You don't want to overtrade it. How much money do you need? If you go and have a day job, how much money are you making? $100 a day, $200 a day, $500 a day? So whatever you need, try to make it in your work pay by doing this, but don't overdo it, because then it's like you're overspending. So very important, don't overtrade. Keep peace, okay?